Business is picking up in the school bus business in more ways than one. Student transportation is going into its next fiscal year on the heels of 20% year-over-year growth. And for a closer look at the company and how it's managing to thrive in the current economic environment, we're joined by CEO Dennis Gallagher. Very good to have you here.
Good morning. Thank you. Happy Thanksgiving.
Yeah, happy Thanksgiving to you too. So we can talk about some specifics to do with the company, but actually let's start big picture. A big part of your operations are in the United States. How might the U.S. election affect you? Does it matter who wins? Could there be differences and implications for your business?
Well, on the presidential level, I think if it really doesn't matter as much as it does literally in the House and the Senate. And, if we seem to have, minority parties in either one, I think we're going to see exactly what we've seen before, which is a lot of stagnation. But a lot of our business really has to do with the individual states.
Now, one of the major issues, of course, perhaps not the presidential election, will be the fiscal cliff and that need to cut funding. How will that affect the contracts that you have with the school boards? Yeah,
that's a great question. In our industry, this is a $24 billion industry, school transportation. Here's the key. $18 billion is owned by the government. So, this is something where we can continue to show the government that, number one, they don't have the access to capital that we have. They don't, and literally can't run the same kind of a cost system that we do. We do a lot of regionalization. We build regional density in our operations, so we can lower cost of operations, and we've got tremendous access to capital. When school districts or municipalities want to raise revenues, they got to raise taxes, okay? We raised $85 million last March. It took us 48 minutes. So we've got a tremendous access to capital, really good credit profile, and that's what we think is actually going to help us in a trajectory in continuing our growth.
Yeah, we've had a lot of state and local governments in the United States cutting back on education, as you say, trying to save money, and education's been one of their targets. Is that a problem for you, or is that potentially an opportunity?
Well, we actually, obviously, I see it as an opportunity because of the size difference. I mean, when you look at the U.S. from a map point of view, if you took literally Virginia down to Florida, across to Texas, those what we call red states, and and literally the Sun Belt, 99% of school districts own and operate their own fleets there. We just don't think they're going to be able to continue to do that. So, number one, we see that as a real opportunity.
So that conversion rate that you're mentioning, though, even though it's an opportunity, has been quite stagnant. It hasn't, that shift from public to private has only been happening at a rate of, I think, about 2%. So what do you project that to be going forward?
Well, I wish I could give you the real projection number for that, but I think what's happening is the fiscal cliff will cause more people to cost and compare. And then I think like what we're seeing in states like South Carolina, where Boeing has moved in, and literally we've got making the world's most technologically advanced airplanes in the world, the Dreamliner 787, but yet their kids go to school on the oldest buses in the nation, almost average 20-year-old buses. So these are things that I think the government are struggling with, and they're going to have to make those changes.
And just to remind people, your business is much more in the United States than in Canada.
We represent about, our revenues are about 80% in the U.S. and 20% in Canada. We are a Canadian corporation. Yeah.
Now, your stock did fall sharply in about August when you were sort of set the target of a short seller. And one of the things, and it has rebounded a little bit since then, but one of the things that they were skeptical of was the sustainability of your dividend, which the yield is 8.5%. Can you provide some clarity or I guess defend why you think this dividend is so sustainable?
Well, first of all, on the short sellers, this is, a one or two man, kind of a shop in their garage. Mm-hmm. And, I've actually asked the regulators to hunt these guys down, to capture them, and to arrest them, because they're financial terrorists, and they need to be treated like terrorists. So, they literally prey on shareholders. So this is something that I think, we've asked shareholders, number one, we file publicly information each quarterly that's been audited. So we say, read our information, call the company, call me, and I'll be able to answer. But the sustainability, we're going to pay our 93rd consecutive monthly dividend. you know, somewhere along the line there's a trend there. You know, probably, 48 months it kind of established a trend. But we're going to pay our 93rd consecutive dividend. We got a payout ratio of 79%. So, you know, we've had 20% growth on the top line, 20% increase in cash flows, EBITDA, margins consistent at 19%, one of our lowest debt levels we've ever had. You know, so, I mean, you know, this is, things that I've learned about the institutional shareholders, obviously, is they like sustainability, which I think 93 months in a row is pretty, is pretty valid. They like visibility. And that's what we have with our long-term contracts. We've got 5-7-year contracts going out, so they like the visibility. What we don't have, and what we haven't done, is had growth in that dividend. And that's where I think I've got to challenge our board to say, hey, listen, when we can get the share price into a yield of about 5 to 6%, and or we can get our payout ratio in the 65 to 70%, we should be increasing our dividend on a CPI kind of basis.
All right, Dennis, we'll leave it there. Thanks so much for joining us today.
Thank you so much.
That was Student Transportation CEO Dennis Gallagher joining us here in studio.